please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Priyanka Patel, she writes to us from Ahmedabad, holds 40 shares of TCS at 400 rupees since the IPO. Long-term investor wants to know whether to hold or sell. Prakash, I know that TCS, you're also an investor in the company since the IPO.
TCS.
You said that, right?
No, TCS I'm not. HDFC, IndusInd Bank.
But a person who's invested in TCS since the IPO, what do you say?
Oh, stay invested. Simple. What else you require? Who could ask for anything more? Simple. Good consolidation, very good move. I just stay invested. 1700 is very strong support zone. Looks like it's heading to around 2000. Look for it.
All right, so that was a no-brainer. Remain invested for the moment. All right, with that, let's go across to my colleague Shireen, who's in conversation with the NITI Aayog's Vice Chairman, Rajiv Kumar.
Well, that's right. Thanks very much. Let's go across to Rajiv Kumar, the Vice Chairman of the NITI Aayog. Sir, appreciate you joining us here on CNBC TV18. Let me start by asking you about the macros and what the assessment at NITI is when it comes to the macros. While we are seeing a cyclical recovery in the economy, there are several risks that we need to factor in. Oil prices, one possibility. The possibility of a fiscal slippage is something that the market is always concerned about. High interest rates and, of course, the rupee now touching a record low of 69. From everything that I've highlighted as possible risks, what would you be most concerned about?
Shireen, you pointed out to four things, and let me take them one by one. The first one, of course, you mentioned was the oil prices. And as you would have noticed, these have tended to come down, and we are very pleased with Donald Trump's announcement that he's asking Saudi Arabia to ramp up the production because of the fall in Iranian crude and the Venezuelan crude, and you have seen that there has been some increase and the prices have moderated. And also we've got news now that US shale should be entering the picture in a much bigger way.
Okay.
And we are urging the government to try, fix up the imports from US. So our prices, as you noticed in the last 3 weeks, domestic prices have come down. So I think oil prices, the scare is sort of gone. On the fiscal slippage, we had a meeting of 29 leading economists in NITI just the other day. I think it was on Thursday. And there were two very clear views that had come out. See, one, of course, that in these days of turbulence and vulnerability, one must hold on to the target as hard as one could.
Yeah.
But there was the other view also that, in the past, fiscal slippages have not always produced inflation, and they might be needed for generating employment, which is a real concern for every government.
Okay.
But the good news here is on the revenue side. As you would have seen now, the GST numbers are very good, 17% increase, the tax base has gone up, and the direct tax numbers, actually direct tax is 17% up, and the GST is coming in at close to 1 lakh per month. So I think there is a fiscal room now being available for the central government to ramp up its public capital expenditure, which has taken care so far of the lack of commercial bank credit to infrastructure. And on the rupee, let me just end by saying that, the rupee is still relatively overvalued given the relative effective exchange rate. So in that sense, it shouldn't be a cause of concern. In any case, there hasn't been a free fall like we experienced that in 2013. And it's very clear, I think everybody agrees, that we are far better prepared and we have far more gunpowder to handle any vulnerability that might come about as, either through the Trump tantrums or the Fed raising the rate, etc. So overall macro, we in NITI are pretty sanguine. We think that we are on the right track.
Okay. And
that the economy, given the latest manufacturing PMI, the sharp increase that you've seen of 53 going up to 53, I think the recovery is strengthening, and you will continue to see a rate of growth of above 7.5 in the quarters in FY19, as it were.
Sir, you picked up on several aspects there. Let me just go back to that meeting that you spoke of, the economist meeting that NITI held, where you said that there was a view on whether you need to stick with the fiscal deficit number or could you perhaps exceed it to try and pump prime the economy. Which one was the majority view, of sticking with the deficit number or being able to pump prime if need be?
You know, there was a clear distinction in my view between economists representing investment banks and funds and, you know, and those who are concerned about, you know, fixed income, you know, state of fixed income markets, etc. And, you know, and basically the financial sector economists. But on the other hand, we had, I think, equal numbers of, you know, the other macroeconomists from think tanks and institutes of IIMs and others who sort of believe that, look, growth has got to be a prime objective, and I mean, in fact, employment, as they said, and they said that you know, there is therefore, you know, appetite, you know, there is therefore no need to be very hawkish on the fiscal deficit
number. Is that the NITI Aayog's point of view as well, sir? Is that the NITI Aayog's point of view, that we don't need to be particularly hawkish on the fiscal deficit number?
NITI Aayog's point of view has always been to exercise fiscal prudence and to be cognizant of the target, but to continuously explore space for higher fiscal space to meet the obligations of public capital expenditure.
Okay, let me ask you about some pending decisions, sir, and this is something that we believe we could get an answer from the government on in this week, and that is the MSP. Why is it taking so long for the government to come out with the calculation as far as the new MSP is concerned, and where do things currently stand? Are we expecting a decision this week?
Well, there are two separate parts here, I mean, points here. One is the announcement of the MSP itself. And I think that's about, you should see that announcement within this week or the next week. I think those numbers and those estimates being done by the CACP, the Commission on Agricultural Costs and Prices, I think are ready and they would be announced. I suppose, as always, they are going through a final check on how the, you know, in the government as a whole. So that's first point, and I think there should not be much delay in that announcement. The second aspect, of course, is the government's own schemes for procuring at that MSP, because now you know the government has announced its intention very clearly in the budget that they will cover all 17 crops, all 23 crops under the MSP formula, and therefore, the NITI Aayog had proposed 3 alternatives to that, and those have yet to be discussed in some detail. And I know that these discussions are
but it's been a while since the budget, Mr. Kumar. So that's what I'm trying to understand. Why is it taking so long? I'm also given to understand that perhaps the finance ministry has raised some concerns on the fiscal impact of the new MSP formula that the NITI had suggested, the 3 proposals that you had put forward. So has there been a revision that the NITI or the Agriculture Ministry has made post the finance ministry's feedback?
Yeah, if you had read it carefully, Shireen, the objections from the finance ministry, which I haven't seen formally, but I've read in the press, are about the 2 formulas that have been proposed, because the third actually wasn't discussed in some sense, and this is what so the finance ministry's own concerns, genuine concerns, plus the fact of some of the states wanting to have their views heard about the 3 different schemes, is what is causing some complexity. It is a very complex situation, because and what we are trying to do from NITI is to re-look at all the 3 and figure out as to how we can minimize the fiscal burden while getting the best deal to the farmers. But the most important thing here is that the government is committed to giving the farmers the best deal possible, so that any complaint about procurement being less than what is needed or warranted shouldn't be there.
So how much longer, Mr. Kumar, before we actually see a decision and clarity on the new MSP regime? And ballpark, we are given to understand that the proposal that was sent to the finance ministry would have in fact meant an outgo of about 25 to 30,000 crore rupees. That was the ballpark that we were given to understand. Is that accurate?
I am not sure of that. I am not sure of that number. And to predicting how long anything will take in a government is like predicting the World Cup soccer World Cup results. So I'm not going to hazard that. Yeah.
Okay.
So, but I think it'll be out so.
You believe it'll be out soon. Let me move to another issue, sir, and that is the issue of strategic divestment. The NITI has been entrusted with lining up these candidates. It's been done. It's been 3 years. We haven't seen anything move on the strategic disinvestment front in any real earnest. Has the strategy now shifted to moving items from one government balance sheet to another? The point in question is what is happening with LIC and IDBI Bank. Is that the kind of strategic disinvestment that we're likely to see?
Shireen, you are being uncharitable. You know that you are being uncharitable.
I'm not being uncharitable,
out of the,
sir.
out of the lack of crores.
If that is the strategy going forward.
No, of course not. And you know that even 2017-18, out of a lakh crore, of non-tax revenues, of I think about 22,000 alone, just that much was for the HPCL ONGC deal. The rest were, receipts from equity dilution in public sector enterprises. And you know that about, I think, 16 public sector enterprises the first time were closed. And the voluntary retirement taking place, etc., etc. Never before in this country have style cooperation, etc. And the HMT were ordered to be closed with their assets being divested and so on. So give us the credit.
I'm not at all taking away any credit, sir. I acknowledge the fact that you very bravely put together a list of candidates for strategic disinvestment. Yes, you exceeded the disinvestment target for last year. You've got a very ambitious target this year as well. All I'm asking is that given the current appetite and context, are we at least when it comes to big ticket strategic divestments, are we likely to see a transfer from one government balance sheet to another?
No, you will not, and you will see actual disinvestments taking place, and you may, however, be a little disappointed in the sense that us not being able to find a single strategic investor in each of the public sector enterprises, because that's not easy to get, and that depends on a whole number of things. But you will see this target of 80,000 crore being met through proper, as I say, normal disinvestment proceeds through the market. Let me put it like that.
Okay.
And this will happen in the third and the fourth quarters of FY19.
Okay, so you're saying strategic divestment may be a challenge given the lack of buyers, but through the ETF route, through the OFS route, the government will achieve its disinvestment target. But since we are talking about strategic divestment,
I'm sure of that.
Sure. Let me ask you about your point of view. And the NITI's point of view on the proposed LIC IDBI Bank deal. There has been a fair amount of criticism that why is the government pressing ahead with LIC picking up IDBI Bank? We are given to understand that there were perhaps at least, two interested private sector players, but the government has chosen to go the LIC route. Why should the government saddle LIC with IDBI Bank that's saddled with a mountain of NPAs at this point in time is the question that most people are asking.
Well, I mean, I don't know whether you're right in saying that the government has posed the LIC. LIC, I suppose, has an independent board, and it's probably a board decision of the LIC. But even if I accept the fact that the government may have in some sense nudged the LIC to do so, I don't see any issues in that. Because if there is surplus cash available in one of the government corporations which can be put to good use, if and if only the IDBI management is changed, and if only we have made sure that the governance, the corporate governance has been put on the right track, then we should be doing this. Because I think this is a question of one company making a sort of a reasoned investment decision in the hope that it will make money going forward. Now, I believe that the chairman and managing director of the IDBI has now been appointed.
Yeah.
He's somebody who's who's a wonderful. I know he's one of the best professionals in the I think it's Sriram.
Yes.
Mr. Sriram,
yes.
Whom I've known in the SBI when I was on the board. And I think under his leadership, you will find IDBI, IDBI recovering and being put on the right track. And therefore, for all you know, just like Barack Obama did with his banks, LIC may have made a very good bet.
Okay, since we're talking about
and
banks,
may end up making money.
Okay, since we're talking about banks, let me ask you about the current plan that is in fact being discussed as we speak, and that is the need for either a national AMC or a national ARC. We are given to understand that there are reservations even within the government quarters on whether an ARC is the route to go or whether an AMC is the best way forward. The SBI chief in his conversation with me very clearly said the need of the hour is an asset management company. What's your own view on this? Has the NITI done any work in any form or fashion at all on this, and what would you suggest?
NITI has not been called upon to look into this, and we've not been consulted. So I would rather hold my brief on this. But I must emphasize what I did in the case of IDBI, which is that I see the problem in the public sector banks as one of corporate governance and one of the whole culture and the ability for risk assessment and risk assessment and credit management, and the entire change that is needed for these banks to become far more sort of creditor, loan friendly and improve their credit to deposit ratios, etc. So I think whatever solution is found there, I have no comments to make because we were not consulted. But in the public sector bank management, I am very clear that we need to bring this change, this radical change in the way public sector banks are managed and in the way the public sector banks make their credit decisions and assess their risks.
All right, so that was the chairman of the NITI Aayog talking to CNBC TV18, talking about a radical change required for the public sector bank. This, as the government and bankers meeting is currently underway. The key point also was that the government will go ahead and meet their divestment target of 80,000 crores via markets. So with that, we'll slip into a short break. Come back, we talk about our stock markets and get in a few queries as well. Welcome back. Some decent recovery seen for our markets. In fact, the Nifty as well as the Sensex have recovered about 0.5% from the lows of today's trading session. Some recovery seen in the mid-cap index as well, in excess of over 100 points from the low point of the day. And if you take a look at the advanced decline ratio, that has narrowed a tad bit. Still two stocks in the red. Still we're lower in trade, but we're seeing some bit of recovery. What is leading that recovery? Well, the PSU banks. That one should come up for you. The Nifty PSU bank index has moved about 2%. This, as the government and PSU bank meet is currently underway to discuss on the Sunil Mehta report. So keep an eye out on SBI. That one's moved higher. From the private space as well, we have ICICI Bank, which has moved higher. Infosys has moved higher, as well as Vedanta, which has recovered a good 5% from the low point of the day, which has moved higher. From the non-index space, Punjab National Bank. That one is the one that really stands out, up about 5% from the lows. And Punjab National Bank too has moved higher, explaining the sort of move that we've seen on all the PSU banks led by SBI. With that, we are out of time on this show, but you stay tuned to CNBC TV18. Closing bell comes up next.